In the energy quadrant, taking a look at the September WTI Crude Oil futures contract, which wiped out all gains since early July, falling to its lowest level since July 1st by falling 6 of the last 7 sessions for a total percentage drop of 4.86%. The high today was 65.86, which was actually a gap lower of 14 basis points from yesterday's settlement of 65.95. On the other hand, the low was 64.82, the lowest level since July 1st, which represented a 1.71% drop in price. With a little bit of time left in the session, September crude oil is still down 1.25%. Weak summer demand for gasoline, driven by oppressive heat causing a shift in driving patterns, has led to a significant drop in U.S. gasoline consumption despite the holiday travel forecasts. Gasoline imports peaked at 1,070,000 barrels per day in mid-June of 2025 and have since dropped 10% from the previous week. This subdued fuel demand has pressured crude oil prices lower, amplified by surging imports and increased refinery inventories, which contribute to expectations of further declines in both gasoline and crude oil markets. Also, Halliburton reported flat North American revenues sequentially in its Q2 earnings report, but revenues were down about 9% year over year, reflecting weaker U.S. fracking activity. The overall oil field services market is expected to be softer than earlier forecasts due to declining drilling and production activity. U.S. active oil rigs fell by 55 rigs year over year, signaling reduced demand and pressure on crude oil market prices. This would not be the case if demand were seen as strengthening for crude oil over the next few weeks. Some of those secondary signals are predicting weaker demand for crude oil in the future, hence the downward pressure in futures prices.